Hey everyone, how's it going? Give everyone a few minutes to get in here. Happy Wednesday. Drop in the chat where you are joining us from, whether you are newer to Northbeam or maybe you've been around for a little bit. Either way, we're happy to see you here and happy to get into what we got for today. Andrew, I know things are very much top of mind for Black Friday. How's everything been on your side over the last few weeks?
Yeah, it definitely feels like people are starting to ramp up. You hear a lot more. We're in the middle of planning or trying to get the last few pieces done, but I feel like normal Black Friday fun.
Nice. Yeah, I know for folks that I'm talking to, people were pretty heads down already. So thank you everyone for t making the time to join us live. Um, I anticipate we'll probably get some stragglers, so we'll go ahead and kick it off. And of course, this webinar is being recorded, so we'll share it around after the fact. But without further ado, let's go ahead and jump in. So, as the name suggests, we're here to talk about Black Friday, everybody's favorite time of the year. Andrew's put together quite a bit of information for us to go through today. Best practices, what we're seeing. So yeah, let's jump in. Before we do so, just want to cover for those who are maybe new to Northbeam, what we do. Northbeam is the marketing intelligence platform for profitable growth. What we offer is real-time multi-touch attribution. We are free from cookie limitations or privacy constraints. Know what ads to iterate on, what ads to pause, and what ads are driving performance at every stage of the funnel. Lastly, with our machine learning powered by incremental lift, we are able to understand what's driving efficacy and show you exactly where to deploy your media spend. So with that being said, let's go forward. Talk about the agenda for today. We're going to talk about building a profit-aligned Black Friday strategy. We're going to go through benchmarks and how to set those up ahead of Black Friday, Cyber Monday. Andrew's prepared a little bit of an in-dashboard demo for us to go through. We'll have time for some Q&As and then just some action steps at the end. All right, so in terms of where we're at in the context around today, what's changed? Black Friday, Cyber Monday is obviously the key point in the year for basically every D2C brand and many businesses in general. Cyber Monday 2024, we saw 13.3 billion in revenue, and Cyber Week we saw 41.1 billion. Mobile was 57% of that. And basically was just record setting. And so what we're trying to highlight here is that we expect 2025 to be no different. We are staring down the barrel of a pretty intense high sales season. And so we're very anticipatory towards all of our clients who are on Northbeam being able to utilize Northbeam to drive success for that. What else has changed? We're on a wider promo window this year. People are launching their sales earlier on this year, and discount tails into December are going to be something that remains a staple, and also longer tails is what we're expecting. So plan pacing and also little talked about, but very much important is inventory, also planning that accordingly going forward. What brands did last year? Many extended BFCM windows into mid-November and then pre-seeded demand. So planning around that, seed versus harvest helped weekend decisions. So basically, in the spirit of what we just talked about on the prior slide, folks are starting to essentially just launch their sales a little earlier, start to get BFCM top of mind for consumers a little earlier on, and then they're really just pushing hard during that sale peak and reaping that harvest. Creators and affiliates played a major role in discovery and conversion, especially where checkout lived on socials or via partner links. I know TikTok Shops is huge on everyone's mind right now online, and we anticipate that creators and affiliates are going to continue to be a major part of this year's BFCM. Capture lines, Google brand and shopping surged under sales. Teams kept coverage while preventing cannibalization of demand creation. So obviously, during our peak performance time, we're going to push harder on that very bottom funnel demand capture component of our tactics. We expect that to obviously remain the same. And with what Andrew's prepared for today, we'll talk very much in depth about tactically what that looks like. And Andrew, I'll pass it off to you.
Awesome. So the first thing we're going to kind of cover off today is looking at some of the historical data for 2024. As Braden mentioned, right, we're starting to see sales start even earlier every year that comes with Black Friday. And what we pulled here is based on our biggest spenders, when did we see their sale periods kick off? And one of the biggest callouts you can see here, right, is the biggest segment is actually the third week of November. Roughly about 28% of all the sales that we saw in our system started that week. But if you look at it in combination with the week just before Black Friday, it's closer to 50% of all the sales happened the week prior. So again, continuing to move forward, but we did see similar trends in our data in terms of how people are shifting. Braden, if you want to go to the next kind of slide here. The next piece we're going to talk about is as it comes to the big weekend itself, what were some of the trends and changes that we saw both performance, spend, as well as across the board? So the first one here is just looking at efficiency. If we were to take a look at our performance leading up to Black Friday and how that compares to when we got to the big moment, how that shifts over the weekend, and how that kind of tails off into Cyber Monday, looking at both the median, which is really like our average customer, as well as the ones that saw above average performance being greater than the 75th percentile. You can see here from Thanksgiving to Black Friday, across our average customer, we saw about a 40% lift in MER. For the ones that seem to do a little bit better here on our above average, that lift got as great as 80%. So really expect to see a big jump when it comes to Black Friday, especially as we're leading into Thanksgiving. From Black Friday onto the weekend, a lot of us know, right? We see a little bit of a drop off in sales, revenue, and this is true in our data as well, where even the best performers across the entire weekend saw a dip when it came to Saturday and Sunday compared to what we were seeing on Black Friday. So if you're seeing that this year, you saw that last year, you're not alone. It looks like for the majority of brands, we get a little bit of a cool off when it comes to that weekend. And then Cyber Monday coming on the wrap up, again, another spike, not as big as what we typically see for Black Friday. But for the average brand, we're expecting about a 20% increase from where we were over the weekend. And for some of those above average performers, it's getting close to 50% increase on blended efficiency.
Yeah, and I anticipated maybe some of that comes from also folks just anticipating that Cyber Monday sale. Maybe consumers are expecting something a little better. Maybe they're just kind of full and stuff from Thanksgiving. But yeah,
Awesome. Do you want to go to the next slide?
absolutely.
So, of those segments that we were looking at in terms of like above average performance and the median, how did we see them shift their spend patterns for the ones that did really well as what our average customer saw? So, on average, from Thursday to the Black Friday, we saw a lift of about 34% in total average daily spend. And then for our top performers, very similar at 33%. So, what this kind of tells me, I know a lot of teams will go up and jump up 50, 60%. It looks like our above average and our average performers are roughly bumping up 30%. So maybe a little bit more of a gradual incline than what we've seen in the past, knowing that sales are starting a little bit earlier. The next one too, Black Friday to the weekend, similar to efficiency, spend comes down with it. Our average brand dropped about 17% from what they were spending on Black Friday. Our best brands took even more of a haircut, bringing it down 20%. And then as we lean back into Cyber Monday, you can see on average for most of our customers, they bumped up spend about 5% from where they were across the weekend. And then actually what we saw for our best overall performers is not as much of an increase, but kind of riding that weekend average spend level and allowing some of that lagging impact to come in and drive their efficiency on Cyber Monday. Awesome. So the next question here, and this one's unique to Northbeam, is being able to understand how much of our impact is coming from the spend that we put out during the Black Friday period. Obviously, we know teams are doing a ton of prospecting in October, November, trying to really ramp up their awareness consideration, but we're also elevating budgets when it comes to the actual weekend itself. So what this metric can show us is how much of our impact is coming from what we're spending on right now versus how much impact is coming from some of those trailing touch points that we've already paid for and are now starting to see the fruits of our labor. So first, on the new customer one-day impact, on the average for our brands, we saw about 73% of the total revenue come in from efforts that were driven on the one day. So what that tells me is even during our biggest sale period, new customers, a lot of the impact that we're going to have is actually on the weekend itself. On the blended side of things, you can see that 73% drops all the way down to 58% for the average brand on Northbeam. And what that tells me is those returning customers, because they're in your existing customer base, we're sending out emails, we're pushing some of those more full funnel campaigns ahead of time. That leggy impact makes up a greater percentage and roughly makes it so that when you're spending those dollars on that day, most of your impact is truly going to be coming from that new customer, with some of it coming from the returning, but a lot of that coming from that lag. Awesome. The next one here is just how we saw splits in between new customer percentage versus returning customer percentage. I know this is always a question for teams where, hey, how much can we expect to see when it comes to our existing customer base? How much do we have to add in terms of what we're doing leading up to and on Black Friday? For the weekend itself, what we saw on average for new customer revenue, it made up 58% of the total for our average brand. And then on the returning side, it was closer to 41%. But for the ones that saw above average performance, you can see there is a slight uptick in that new customer percentage, as well as a little bit of a drop off in that returning. And what that tells me is, again, similar to the one day impact, the teams that leaned in on their one day insights saw some really good performance, generally saw better performance overall, knowing that the new customer segment was the one they were able to scale on more. The second chart to the right is showing how did site and creative performance change over the weekend. So if we were to look at all of November leading up to it and the weekend itself, what did we see in terms of conversion rate improvements as well as click-through rate improvements? And on the average customer, we saw about an 18% increase for click-through rates. From a conversion rate, that came up about 30% as well. But more interestingly, too, for some of the best performing brands within Northbeam, what we saw was a greater lift on conversion rate, which led to a much stronger, greater lift on click-through rate, which also led to a much stronger conversion rate. So one of the things that we all know is creative is a big piece of the Black Friday puzzle, but we can see it here in the data that if we have that higher click-through rate, not only does it lead to a higher conversion rate, but it also leads to us being one of the top performing brands. So definitely want to make sure we have those dialed in and can continue to monitor. But here are some of the benchmarks from what we saw in 2024 in terms of those improvements.
Awesome. Thanks for that, Andrew. So kind of distilling that down into pre-Black Friday planning. One, benchmarks. We want to make sure that we're updating those benchmarks on prior to BFCM. Make sure that we're publishing those out in our Northbeam dashboards. What that's going to do for you is it's going to hold you to what that good or bad number is when you're looking and making optimizations on a much more frequent basis during that time frame. Model use, if you're enabled, keep CDV on and make sure to use model comparison as a quick cross-check to confirm prospecting value before finalizing budgets. So with the launch of CDV, basically we're now able to see that efficacy from those upper funnel channels and upper funnel tactics on places like Meta. So make sure that you're comparing that. Media mix, if you're on MMM, run MMM for Thanksgiving. Cyber Monday with sensible ladders. This is going to help you optimize and set spend caps to avoid diminishing returns. So quite simply, understanding where that ceiling lies for any individual channel, any individual tactic, that's going to be vital during this time of the year, as well as going forward. Assets in terms of what Andrew was just stating, we're really focusing on promo specific landing pages, offer matching the ad creative to that landing page, making sure that those click-through rates remain high, as Andrew was stating. That's all key during this time of the year. I'd also maybe add focus on what works during this time of the year. Now is not the time to necessarily go way out the deep end with a net new test for something you never tried before. Try to stick to what's proven. Focus on things that are really going to drive that performance during this peak moment. Channels, obviously, we're going to increase email and SMS the week before Thanksgiving and throughout Cyber 5. That's obviously just to make sure that we're hitting people who are entering our funnel, making sure that we're top of mind, getting them to ultimately transact during that peak period. Moving forward, what changes on BFCM and how to read performance. So really what we're looking at here is what we expect to deviate from the standard. Paths to purchase lengthen around BFCM. So again, calling back to what Andrew was stating on prior slides, much of Friday through Monday revenue was seeded earlier on. So one-day reads can understate work that pays back over longer windows. Compare one day versus 7, 14:30 before changing spend. Understand that there is delayed impact to dollars spent, and that you'll reap those rewards as time goes forward. Last click pull increases during Cyber 5. Avoid reflexivity or reflexively moving budget, that is, away from demand creators that fed the weekend. So basically, we're going to focus on making sure that top of funnel is still a priority, that we're still still making sure that new folks are entering that funnel across the board. We're not going to pull back too hard, understanding that we do expect an uptick in that last click. And then set decision windows in advance and stick to them. So this goes back to benchmarking. Make sure that you understand where your ceiling and floor is. Make sure you're not trying to decide that during the prime time, if you will. Goals and guardrails. So one is timing. Use last year's data to identify the most effective days leading up to the event. If you have MMM, use it to plan which channels and to prioritize early, right? So every data set is slightly different. So make sure that you are understanding what channels are likely going to be your key drivers this year. Targets. We've spoken to this already quite a bit, but lock in those targets for MER and profit. Publish channel level stoplights using benchmarks for Friday through Monday. Make sure to refresh those targets once prior to Thanksgiving and then post Black Friday. That's obviously just going to be there to make sure that you're always operating on the most recent data. And so for this, I will pass it off to Andrew to go through a demo walkthrough and showcase benchmarking as well as some use cases and best practices.
Awesome. So when it comes to Black Friday, as Braden said, a few things that we're always keeping in mind and we always want to be thinking through when it comes to one, setting our goals, two, monitoring the impact that we have, and then three, being able to kind of take that impact and spread it across time so that we can see all the way down to the hourly and as far as Braden said, for some of our larger attribution windows. The first thing here I always like to show are profit benchmarks. It should be really easy for us to come in here, input the target that we have either on an MER, new MER, or even a CAC basis, click next, and be able to see what we should be hitting across all of our channels. As Braden said, this is going to make sure your entire team is aligned against the exact same end goal when it comes to efficiency and make sure that when we go into the sales page, we can really easily see what's working and what's not, especially on that one-day basis. Outside of that, a few other views that I find really helpful. One of them is on our overview page, and this comes to that one-day percentage that I was talking about before. So one of the views that we have available within here is if we click tile, we can click this conversion like tile, and this customer here has a really nice setup. But what this is able to show us if we're on a cash accounting mode is for any given day, we're able to see how much total revenue came into the business, as well as where that revenue came from in terms of its touch points historically. So for this brand, you can see here $357,000 in total revenue came in on the start of their sale. But we can see all the way down there at the bottom, only 176,000 of that 356 or 357,000 actually came from the touch points we were paying for on that day. So again, this is going to be really helpful for us to monitor and make sure that we are keeping a healthy percentage of one-day impact. This aligned with our efficiency targets. If we're starting to see that impact drop off and efficiency come with it, it may be a scenario where we want to think through how much we lift spend, just knowing that our trailing impact is the one that's driving efficiency. And if we lean too far into the spend right now, we may kill some of that if we're not seeing good one-day numbers. Beside it too, have that one day as well so we can see that. And the percentage would just be that one-day number divided by the total. And you can look at this across all your different paid platforms. The other view within here that's really helpful is if you have historical Northbeam data, you can start to look at this on accrual as well. So you can see historically which days led to the most revenue, not just for Black Friday, but across all time. So this works in an inverse where essentially it says for that one day, how much revenue came from those touch points. It will always be the same as what we see in cash. But the 7-day value are all coming from what orders took place 3 or 7 days ago that are tied back to the spend and the touch points we paid for on the 11th. So if we're doing a historical analysis to see, hey, what were our highest efficiency days, where should we lean in more. A great spot to look. Another piece I'll just flash here as well. If you've been on the platform for more than a year, so that we have some of that Black Friday data, there is an example report that our media strategy team can help you pull that will take some of that data and break it out from an all paid perspective as well as at a platform level so that you can start to see both the 1 day as well as just the sale impact. So really giving you insight into not only what do we see when we're making decisions on that day, but how much additional revenue is it driving when we launch that sale. And you can look at this from a percentage of contribution and compare it to how much you guys are spending to be able to see what days are essentially punching above their weight. Are we seeing 110% return for our spend allocation? And give you some insights of maybe where we want to spend a little bit earlier. And this can also come at a platform level. So a channel like Facebook, you can see here some of our more impactful days were leading up. Everything during Black Friday did see really good 1 day numbers, but maybe not as much lift because again, we didn't have as much time for us to mature those touch points and help them convert. If this is something you're interested in, you can reach out to the Northbeam team. Again, we'll be available only if you have enough data from last year, but very helpful if you're trying to figure out how to pace your spend across each of your different channels. The second piece here I always like to talk about when it comes to Black Friday is just sales page decision making. So one, having those targets set up so that your team can really easily see how does our performance compare. And then two, being able to look at it on a 1 day window. So again, during the sale period, it's going to be really helpful for us to cut out that noise of some of the trailing impact that we have for campaigns that have been running a little bit longer. So what we'll want to be nailing down is what is our impact right now? And based on what we're seeing performance-wise, should we be scaling up or down? This will make sure that we don't get caught flat-footed, killing some of our efficiency that we've already paid for. The second piece as well, looking at both blended and first time. Again, as you guys saw on some of those slides, first time seems to be the one where the 1 day impact is the greatest. If we're always optimizing across both, we're never going to be in a scenario where we're leaning more towards returning customers, even though retention, email, SMS are helping us out. And we are not really driving the efficiency that's making the big sales days really big for us. The final bit I always like to mention as well, which is just helpful, if you're looking to do a little bit more intraday adjustments, you can always flip down to this hourly level of granularity. I'm a big fan of yesterday and today. Let me do yesterday and today. And what I like to look at is one, from a platform perspective, how well are we doing, being able to see some of those mini charts. But another piece that's really helpful is if you use these charts up here at the top where you can compare spend versus ROAS. If I click in on any one single campaign, ad set, or ad, this chart is going to update to only show me that information for that specific one I've clicked on. The other piece you'll be able to see as well is where does our data cut off based on when we last processed. So really easy for you to be able to see how fresh, how up to date is our data. Again, if we're very close to when we expect the next processing, we maybe wait a little bit longer for us to go make those decisions. But this is super helpful insight of, hey, how's our spend been pacing as well as our efficiency? Are we seeing any drop-offs more recent to the hour we're looking at the performance in right now? So that way we can make those more in-day optimizations in the account and feel really confident about them. Outside of that, I think biggest piece, benchmarks, making sure you understand your business, using the data that you have historically to help guide you guys to make the best decisions on the day. And obviously, if there's any questions that come out, the Northbeam team is here to help. But Braden, I'll pass it back to you to kind of wrap it up.
Yeah, absolutely. Thanks so much, Andrew, for that walkthrough. Let's hop back into the presentation here. All right, so that really brings us towards the end. We want to open it up for Q&As at this point. So feel free to drop your questions in the chat. Andrew and I will read through them and answer as best we can. So I'll give everyone a few minutes just to type those out. And while we're waiting on that, Andrew, one question that I do have for you is as folks are kind of gearing up and they're slotting things in, when it comes to that intraday reporting and hourly optimization, how are you thinking about that in terms of all the various channels that they're on? Do you suggest that they do that, across every single channel, or should we obviously maybe focus more on that for our larger share of wallet channels like Meta? What are your thoughts there?
Yeah, I think you kind of nailed it with the last part. Being able to look at it for the channels where we have a lot of spend and it's going to still be significant on an hourly level is where it's going to be important or even just valuable. If we're spending a smaller amount on a secondary channel, hourly data may be insightful, but at the end of the day, those ads, those campaigns may not have had enough spend for us to get a real good gauge of what's happened today. So I would generally be looking at this for like our very big spending channels, especially the ones that we're looking to adjust multiple times throughout the day. For other channels, 1, 3, 7 day numbers are going to be helpful guideposts, and looking at what happened yesterday and today in comparison will be really helpful. But that's generally my thesis. Bigger spending channels would be ones that we can really start to move those numbers on an hourly.
Cool. Awesome. Just giving everyone a couple more moments. See, folks are kind of starting to drop off a little bit. So if there's no Q&As, that's perfectly okay. We will go ahead and maybe move forward. If you do have a question, still feel free to drop it. Um, just going to end with clicks and deterministic views. We mentioned this on the last webinar, and there's been several posts about it since, but clicks and deterministic views is our most complete attribution model we offer to date. We ingest verified views from the following ad platforms with more planned in the future. So now we're no longer modeling view through impact. We are now able to deterministically assign credit, and this is additive to your clicks only data. So very, very impactful and important to be using this and comparing against it ahead of Black Friday, Cyber Monday. I do see someone has their hand raised. Let me see if I can come through here. Let's let him in. Hey, Ruth, how's it going?
Good, thanks. I just was going to ask what you thought of sort of newer channels like AppLovin and what your recommendation would be to try new channels or not.
Yeah,
Yeah.
absolutely. I'll let you take it.
Yeah, I generally say trying new channels never hurts. It will sometimes be difficult to be able to really understand the impact just looking at it Black Friday, knowing that obviously everything looks really strong during that time frame. But if newer channels have been doing well for you guys leading up to Black Friday, I would never make the assumption that that's going to change unless I have some historical data. So if AppLovin has been a good part of your mix, continue to spend there. Think about it as part of your mix when it comes to Black Friday. If we're thinking about testing net new channels, again, I would generally be looking at it as a good option if you'd like to kind of go down that route, but make sure that you're testing outside of that Black Friday window so you can get a really good sense of what it looks like in and out of promo.
Absolutely. And Ruth, I'll just make sure that we answer your question here before I drop you off.
Thanks.
Awesome.
No problem.
All right. Cool. Anybody else with any final thoughts? If not, we will go ahead and end here. Folks, thank you so much for taking the time out of your day to make it out to this webinar. This will be shared through post webinar wrap up here. And we wish everyone the best of luck ahead of Black Friday, Cyber Monday. Take care, everybody.